course, the risks associated with market making being a very big issue when it comes to the oil market, but also keeping in mind that the WTI Safex oil futures contract was launched in South Africa last year, and it's gained momentum since then, but it's also becoming far more accessible to investors and, of course, private investors out there. Joining me now, as you mentioned, Douw Steyn from Nedbank Captial. Douw, thank you so much for your time today.
Thanks, Eleni.
Looking at the oil market at this point in time, and looking at the Safex oil futures contract per se, we know that you get exposure to the oil price, but you also get exposure to the rand-dollar exchange rates. Tell us about the uptake of this futures contract, and also given the fact that we've seen massive headway since last year, and of course a lot of accessibility as well.
Look, the WTI contract is listed last year in October, and now at this stage is being included in the financial platform as well, so it's accessible to more people that's trading via Safex. I think it's very exciting. Using the contract, you get exposure, as you say, to the oil price as well as the dollar-rand exchange rate. And we've got to take into account that the base pricing mechanism here is into rand and it's not into dollar. So you, as a position taker, need to be cognizant of the fact that you are trading a rand-based contract instead of a dollar-based contract.
And tell us about the pricing mechanisms. Because as I said, you get exposure basically to the rand-dollar exchange rate, and you also get exposure to sweet crude.
So from our perspective as a market maker, when we deal on the Safex WTIO contract, you sit with two risks, two building blocks. On the one side, you've got a NYMEX oil exposure, and on the other side, you've got a dollar-rand exposure. You unfortunately can't use the dollar-rand spot exchange rate to convert the price. The price of oil, as you see it on NYMEX, is an outright price already. So we use a bit of a calculator to calculate an outright price of dollar-rand to the specific maturity of the futures contract, and then we convert. So you have, absolutely, you're sitting with two different risks basketed into one, yes.
Oh, also just looking at the fact that, when you look at NYMEX contracts, you've got the option where you can actually get a physical delivery. Here in South Africa, it's obviously financially settled.
Absolutely. This is a financially settled product. It matures a month before NYMEX goes physical. And that's the way that we've chosen to settle it. Yes, absolutely.
Well, just looking at what it's offering investors out there at this point in time, because we were talking a little earlier, and prior to October last year, the only way an investor in South Africa could really get exposure to the oil market was through the likes of buying a stock.
Look, the investable universe have grown. Here we sit with rand oil. Safex has also introduced gold rand contracts as well as some platinum contracts as well. So the investable universe is much bigger than it was a year back. Traditional investment would be into commodity-linked equity investment. That is no longer the case. You can now go ahead and buy and sell on Safex rand denoted in or oil denoted in rand.
Well, just looking at WTI, because essentially what that means is it's a benchmark of oil contracts in North America.
Absolutely.
And when you look at the speculation and the speculators that are in that market, we know it's between 20 and 40%. So quite a massive chunk, but in the same end, it's also offering liquidity. How is the speculation play here in South Africa when it comes to futures contracts?
Look, yes, the contracts are aimed at a retail space, but if you've got pertinent rand oil exposure that you wish to hedge, the market is there for you to take advantage of that. From our perspective, yes, there's a lot been said over the last year, 2 years specifically, from an investor versus a speculator perspective, and can we deviate too long from fundamentals? Certainly for this contract, we are using WTI as a benchmark. So we're pricing off an international contract. WTI is the most liquid oil futures contract in the world. And I don't think we'll have any problems from a South African perspective, specifically because we are pricing off that contract and not locally.
No position limits at this point in time for South African investors?
No position limits at this time, yeah, absolutely, yes.
Looking at the oil price as well, of course we're talking about sweet crude here, but let's just look at Brent crude price. Sure. There's also a speculation play. Supply and demand scenarios, of course, play a fundamental role, but also speculation is quite a big chunk of it. Where do you expect oil prices to go?
My own feeling is that we have bottomed on the oil price. I think we're heading higher. We're just below 80 at the moment. I think we are heading into that $85, $90 per barrel scenario. I think everything has been discounted in the price as we stand here. Everybody's talking about a double bottom, etc., etc. But we haven't made new lows on oil, and that tells you something, yes.
It's a good time to buy oil. Thank you so much, Douw.
Thank you.